Hi folks, welcome to the video. My team has very cleverly clickbaited you to click on this video and which says Mat Kharido Gold. So uh, you will see in the video how it is exactly the opposite. Let's see past gold rallies, how gold performed in USD and INR and what was the drawdown post peak. So we'll go back in the history and see the performance of gold. Let me start by saying that I have been propagating narrative about gold for like 9 years now on X, uh, and I myself have been a gold investor for the last 30 years. I think it's a great disservice that financial analysts, fund managers have done to the Indian investors by not allowing them to accept this asset class as a potential uh, diversifier of risk uh, as asset allocation and only merely treated it like it's just good for some jewelry or it's a pet rock. Warren Buffett says it has uh, no earnings, no income, it's useless. Then why is that all central banks want to have a piece of it? So you have to see what is happening in front of you. Don't listen to experts just because they want you to listen to their narratives. Listen and see what is happening. Why is there a beeline for every country to acquire more and more gold? There has to be a reason, right? I mean, everybody is not stupid. So gold outperform uh, in the last many years all asset classes, but gold does it in a fashion which is very lumpy. So it'll not be like a continuous rally across decades. It'll be like lumpy returns for few years and then it'll go dead. Then lumpy returns, then it'll go dead. That's how gold normally performs. So in the last, if we see from 1970, and the history is that 1971, August 15th, when gold was sort of unshackled. Before that, it was calculated at $35 per ounce, and it was a fixed rate because the US dollar was backed by gold, and countries could give dollar reserves back to the US and get their gold. But when the US started to misuse this privilege that they had by spending recklessly in Vietnam War, etc. Countries like France, Britain, Italy, Germany, they decided that they can't, have the risk of their gold uh, be sitting in the US, and they would like to get their gold. So they said to the US, you take your US dollars back and give us our gold. And that's when US realized that since World War II, when they had the massive uh, storage of gold, because they had funded a lot of machinery for arms and equipment for World War II. So everybody was giving gold to them and they were supplying the arms. So they built a huge a collection of gold, and which they depleted over the years. And by the time 1971 came, they realized that they cannot play this game anymore and they cannot exchange the dollar for gold anymore. So uh, President Nixon on 15th August 1971, he declared that dollar will not be convertible to gold, although dollar will stay backed by gold, and this is a very temporary measure. Of course, the market did not believe him, and within a span of less than 9 years, gold went from $35 to $800. More than 20x was the move here with one blip in the middle. You can see $35 going to about $800. And then what happened is that a significant number of European nations like UK, uh, and even Switzerland and Canada, they decided that they are going to sell off their gold because gold is a useless asset as per many thought processes, and they decided to sell their gold, and they were selling, and there was a pact that was made within countries that you will sell only so much per year, and that ended in the year 2000. So this bear market that came in gold was actually due to central banks selling. And then post .com, people realized that this fiat money business is getting completely out of hand, and gold rally started again from $200 went to nearly $2,000, so almost a 10x gain, or 250 to 2000, about 8x gain that happened here. Then there was a mild correction, and of course we are now at 3600 or so. So that's been the gold dollar journey so far. The first phase that happened here from Jan 70 to October 74, in that small 4 year period, 4.5 year period, gold went up 456% at CAGR of 43%. It's unimaginable that any asset class does that in a very, very short term. It was the end of the Bretton Woods 1971 dollar unpegging from gold, as I just mentioned. Inflation was spiking, oil crisis, double digit inflation in US. Nobody can today imagine that US had double digit inflation, or that interest rates used to be double digit at that time. So a lot of credibility loss of USD that boosted hard assets. And if you will now compare today's situation, we are going in that direction. A lot of investors also could buy gold for the first time, because earlier it was controlled and priced at $35. Uh, and then the next phase came through post 1976, where after a drawdown of 48% in about 20 months, because the rise was so steep, it went from 35 to 200 in a matter of just 4 years. That is also almost what, 6x in 4 years, and then some correction, obviously. And 3.5 years later, there was another bull rally, October 76 to Jan 80. Here, gold went from about $100 to $800, so 8 times within a span of less than 4 years. And here we have data of the Indian rupee gold also. So US gold went up 621% in 3.5 years. Indian rupee gold went up 560%, 77% CAGR for 4.5 years. Just imagine the kick the gold investors would have got in that phase. And this was the phase where runaway inflation was happening. So inflation hit 15% in the US. There was an oil shock that also pushed energy and gold higher. Geopolitical tensions were there, Iran revolution, Cold War was there, and USD kept sliding, and gold became the go-to hedge. So it became like a de facto. Whenever USD will slide, gold will go up. And as I mentioned earlier, a lot of central banks started to sell their gold, and a drawdown of 71% was witnessed in USD gold. And it took 20 years to come out of this correction. Uh, the drawdown started from 1980, and it's only uh, effectively 29 years later where we made a fresh new high post this. In rupee terms, however, the drawdown was 56%, still quite steep. But you can see where it went. It went from 30 rupees per gram to approximately 200 rupees a gram. So 6x in rupee terms also, and then came back to about 100. So 56% drop, and it took about 10 years for it to come out of it, but it was out of it by 1990s. From peak of that till uh, the recovery of gold in US dollar terms, the 29-year period where the white line which you can see is the US dollar gold. Rupee gold actually clocked 382% in that same phase, because our currency started to crash. And these were the years where the the reforms had to be ushered in after we went virtually bankrupt in that period. Then after this phase came phase three, where April 1 onwards, post .com crisis, for the next 10 years, gold rose from $250 to about $2,000. In dollar terms, it went up 592%. In gold INR terms, it went up 573%, about 20% CAGR on both of them. Nothing exceptional, but a continuous 11-year run on that. And this basically was the effect of the .com bust, people shifting from equities to safe havens. Fed rate cut because there was a recession in the US. Whenever rates are cut, gold will fly. 2008 financial crisis also happened during this period, so trust in banks collapsed. Again, gold was shining. And post 2008, Fed started to do quantitative easing, printing money out of thin air. and gold was also seen as a hedge at that time. In the US dollar term, gold corrected about 45%, and it was a 4-year dip, and recovery back to all-time high took about 9 years. In rupee, however, from 2011-12 high, it took only 6 years to come back to a new high. After this humongous run that we've had, we went from nearly 350 rupees to a gram to 3200 rupees to a gram. So almost 8 or 9x kind of a gain. And the drawdown lasted for 2 years, the deepest point, and then from there it was the recovery, a total 6 years. And while the US dollar gold price came back in about 8 or 9 years, rupee gold was already flying at 60% up. So if we just tabulate the entire three uh, periods, so Jan 70 to 74, 4.5 years, gold USD CAGR 43%, uh, drawdown of 48% after that. Indian data I didn't have. 76 to 80, you had 83% CAGR. Indian rupee CAGR was 77%. And April 1 to July 11 period, we had 20% on each of them. So lumpy returns and then it will go quiet. Lumpy returns and then it will go quiet. That has been the format. Now, since October 23, we've had another big run from about $2,000 now to $2,600. So far, for gold USD is up about 123% at 49% CAGR. Gold INR is up about 141% at 55% CAGR. And we don't know where this train is going to go or stop. Uh, so this calendar year itself at 43% gain in rupee terms, where we have now reached 10,933 per gram, is the third best year of gold since 1973. That tells you the importance of this year. Usually, what will happen is that big years will not come in isolation. They will be multiple such years. Like you will see multiple years here, multiple years here, multiple years were here, multiple years were here. So big moves usually will not come in one single year. There will be multiple such years. And whenever gold starts to make an all-time high, it makes it for several more years. So you can see here, it made an all-time high, it went on for next 3 years. Then it quietened out. Then it made an all-time high, it went on for 4 5 years. Then it quietened down. Then it started to make an all-time high, it went on for 11 years. Then it quietened down. Then it started to make a new all-time high. We've already in sixth or seventh year. So you really can't say where this goes. And the context of today's gold market is very, very different from, let's say, this period or this period, because now central banks are pushing through. Although on a monthly basis, gold is certainly looking very overbought on the RSI. So perhaps buyers can wait and look for dips, but you never know whether this is going to be that one situation where it doesn't dip too much. So now what's driving gold? A lot of factors. US dollar, of course, is declining. That is pushing gold up. Markets are, likely to uh, top out at some point, and that is causing. And more than the equity markets, the bond markets in the US have not yielded any returns for its investors for the last 10 years. So people who are sitting with bonds, and bond market is a huge market, they are getting fed up of bonds and they want to move elsewhere, and that money is also coming in. Of course, a lot of safe haven money is coming through. Countries are selling treasuries to buy gold. Policy rates are likely to dip. Uh, 2 or 3 cuts are expected in the very recent near future, and the CPI etc. is also not moving down. So everything is pointing towards gold. What's driving gold now? The resilience is basically the headwinds that were limiting the factors like higher interest rates, and perhaps some money that was destined to come towards gold was going towards crypto, which seems to be now balancing out. Uh, I would hope that more and more of that pie will come towards gold, and basically the gold put that started from Feb of 2022. So when Russia invaded Ukraine, um, the West sanctioned and basically uh, did not allow Russian assets to be given to them, and they froze their assets. Suddenly, every country in the world realized that our gold is sitting in the Western world. Even India's gold today also is sitting in the Western world. We've only been able to get back about 200 tons. I think another 200 or 250 tons is still sitting out there. And there is no trust between any country now. It is not like the world of 1970s or 80s where countries could come together and say that, okay, I'll allow my currency to appreciate so that dollar can depreciate. That's not going to happen now. The relationships have been soured. So there is a full high probability that others gold is going to get confiscated, and the easier and sort of the faster and the sooner one can get your gold back, that will be safe. And hence central banks which have been holding US dollar as their safe haven are getting very wary of that safe haven, and they're saying, okay, let me replace some of that with gold. And so central banks which were buying 200-300 tons per year till Feb 22 have started buying 1,000 tons per year now, and they are the biggest buyers in the market right now with no sign of abating. And you can see here the central bank demand, which was 400-500 tons till 2022, has suddenly shot up to 1,000 plus. And in the first, I think, 6 months, we've had, or this was probably 4 month data where we've had about 400 tons this year. It's also going to likely close near about 1,000 tons. The source is GSP Netra on this one. Structural shifts in reserves are happening. Uh, People want to build an alternative to the US dollar dominance. So BRICS and all those stories are playing out. And for the first time since 1996, has gold allocation in as percentage of foreign reserves, the yellow line that you can see, has crossed the US Treasury holding. So India also, a couple of weeks back, has declared that we've sold $25 billion of US Treasury holdings and we are moving into gold. So this ratio or the percentage, if it comes back to 40-45%, we are currently at somewhere near 28 perhaps, uh, is going to make a huge difference to gold price because of this demand. And US treasuries going down means that everybody is dumping the US treasury, and hence yields are going up there. So that is a big trouble for US treasuries. This is sourced from Tavi Costa on X. Um, so the entire world is paying attention to gold. And if all this is not sounding convincing to you about why one should be having gold, तो gold को ignore कर दो, कोई बात नहीं. That is the end of this uh, uh, story. This is also not complete without going through what gold has done when equity has not done well. I have done several videos on this. You can watch um, some videos on gold on our YouTube channel. There are lots and lots of insights in a lot of those videos, and it basically tells you that you are vulnerable if you're sitting with just one asset class. You need to asset allocate, and today that asset allocation needs to be in gold. And don't just go for 1, 2, 3, 4, 5, 10% kind of allocation. You need a meaty allocation. Talk to your financial advisor. If he advises you against gold, change your financial advisor, because this is the need of the day. Thank you so much for watching this video. Do like and share these videos, and do subscribe to our channel. Thanks. Bye.